Welcome to the Property Profits Real Estate Podcast, the show where real estate investors talk strategy, capital, deals, and growth with your host, Dave Dubeau.
Hey, gang, welcome back. Today, our special guest, zooming in from Austin, Texas. Got a very, very experienced real estate entrepreneur, Ari Rastegar from Rastegar Capital. And today we're going to be talking a little bit about what these guys are up to in the real estate space, how things have changed over the last few years, and where they're going moving ahead. So, Ari, welcome to the show. Great to have you.
Dave, my guy. Good to see you.
Yeah, good to see you as well. So for folks who don't know you, and I think a lot of people do know you, that's for sure, but give us a little 30-second overview of what do you focus on when it comes to real estate investing? What does the portfolio currently consist of? What's the buy box, the market areas? Just kind of give us the gist of things.
Totally. So to your point, I mean, everything has changed dramatically since, rates started to spike and COVID started that. Right now our portfolio is made up of very large industrial facilities. Also large master plan communities of 300 acre plus that has a single family home that's built for rent, some lot sales, multifamily development, commercial spaces, green space, schools, some existing multis, a couple of new super class A office buildings, very, very well located, which is not the norm, by the way. We built them earlier and luckily, we've got them leased. And, and also some super tall high-rise sites, one in Dallas we're building across from the new stock exchange where Goldman is, which will be the tallest building ever built in that uptown Dallas region, and a couple other super prime multifamily sites in Austin. And where we're moving is more around data centers, more social infrastructure work, condominium usages, some single family home in great areas that we can hold a little bit longer term that we can rent, some smaller townhouses we're building, being creative because expenses are so high and, cost of capital is high, doing some modular home development, experimenting with some 3D printing stuff. Starting to dabble in robotics and AI and really starting to build the underpinnings, the technology underpinnings that support this real estate, whether starting to invest in fintech companies, prop tech companies, software companies, AI companies. So, that foundational piece of real estate, starting to find all the ancillary plugins, that power the real estate around the verticals that we've seasoned over the last decade.
Very, very cool. Well, that's a lot of stuff going on in there, Ari. How do you guys fit in? Like, are you operators yourself?
Yes.
Are you capital allocators? Are you vertically integrated with like the development and the management? What is the back?
We're vertically integrated. I mean, the short answer is we're vertically integrated. And, in some types of projects, we'll use third-party project managers. On the, super tall project we're building in Dallas, we'll work with a co-GP, building a 400-foot super tall on a triangle, in an urban development is something that's new for us. But the zoning and then entitlement work is really our specialty. It's like finding great land. I'm an attorney by trade, or a recovering attorney, I should say. And, and then going and meeting with the city, understanding what where the community is going, versus kind of where it is. We own an old, 1960s office building, incredibly well located, that, office doesn't fit the bill anymore. Values are down 70, 80%. But if we rezone it to luxury condominiums, it starts to become interesting. So, this market necessitates innovation, Dave. I mean, there is no just a cookie cutter way of, hey, we got this land, we're ready to go, raise your, LP equity, find the debt. It just doesn't work. When rates hike 500 basis points, in a tightening of that magnitude, it's never happened in either one of our lifetimes. Under Jimmy Carter, which you might remember, rates, hit had very, very high double-digit numbers. But the time at which that it happened, the market was able to absorb it. There was a confluence of other issues that people still made money. I mean, if you go back and you look, and even when rates hit 16%, there was other things happening in the world that allowed that to be possible. But when you start a project, in a rate environment of 4%, and you're completing the project in an environment of 9%, just using an example, values are tricky. So we're definitely anticipating, a very, very serious correction. And I think that's a huge buying opportunity. It's a huge profit opportunity. But sectors like office, are in desperate need of reinvention. You have $1 trillion in office loans that from an equity standpoint are worthless. You have, the CMBS, office CMBS market at the end of March hit a 13% delinquency rate. And when you factor in 20-30% equity, depending on the leverage, you have a real problem. And, at one point, office in the 80s and 90s was the largest asset class of anything developed. And then logistics and multifamily, came in. So it's not necessarily the largest on a square footage basis, but, certainly in a lot of the blue states where people have, population is left. And I don't get into politics by any stretch, but just I use blue just for the sense of the economic environment that's there, where states like Texas and Florida, have created these very business-friendly environments and tax incentives and all that good stuff, that when there are not enough people and businesses are leaving, those states for whatever reason, and those buildings are vacant, you have a deferred maintenance problem, even if you buy them. So even if you buy them at, 10 cents on the dollar, you have to go put in millions and fix them. And, and we have a huge housing problem.
And then nobody wants to rent them anyhow.
And then nobody's going to rent them. So, but at one point, I think it's a big reset. And I think, in my opinion, this work from home thing is really doesn't work from a productivity standpoint. I think people can show up, they can be there. But I think there will be a swing back, because so much of the community that we get working with our colleagues, and I hear that more and more of people, they hate to say it out loud.
They get lonely working.
They get lonely, they get lonely. And then also the other part, I think there's another kind of almost moral issue, in the sense that, and I'm not trying to start a revolution. My job is to make our investors money. Property profit. That's my objective, but, factory workers, blue collar workers, they have to work on site, they have to work, in these settings. And then a lot of other folks are working from home. And, there's just a lot of, dissonance, for lack of a better word, that doesn't add up. And I think over time, these things do start to self-correct, albeit painful. But this is a very exciting time with, the fourth industrial revolution. It's the old great expectations. It was the best of times. It was the worst of times.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com.
Because it sounds like, you're putting a lot of focus these days on industrial stuff. And also you mentioned, data centers.
Yes.
So that's very exciting. And then develop mixed use type. It
is, but everything's harder. Everything takes double the work for half the benefit. And that's just a reality. You're extending loans, you're doing workouts with banks, you're a psychiatrist for your LPs, both institutional and retail. And and this is the world that we're in. And I have not seen as much dialogue on the reality, of how people are dealing with it, because there's a lot of suffering out there. And as I said, we've built some great stuff we've done, but not without pain, without extra work, extra expense, extra timeline, delays, projects being delayed. And, if you got your, big boy, big girl pants on, this is the game, like when money's cheap and rates are low.
Well, unfortunately, especially in multifamily, some investors got really spoiled for a couple of years, and then
everybody looks like a genius with 3%.
Well, yeah, and then they got these unrealistic expectations.
Totally,
right? Yeah.
Totally, and those deals are disappearing. I mean, you're watching operators extend and pretend, right? They're extending the loan, they're waiting, but there's things are gonna start to come around, because those were beta traders, right? They're borrowing at 80% leverage at 4% floating rate. Okay. But when those rates popped, mathematically that equity disappears, and they were getting 10% rent growth year over year. So if you have 10% rent growth and you have low rates, you can hit 15 to 18 IRRs and look pretty smart, but a broke clock is right twice a day, right? So that game where now this is the game of alpha traders. This is the game where you have to really create value. You have to really think outside the box, whether that's zoning, entitlements, or different usages, or finding new creative ways to structure the capital stack using preferred equity, restructuring loans. Like, this is when you roll up your sleeves and really do the work. And, we're in a 75-year kind of debt cycle. We have a 100-year global pandemic. So there's a lot of things, and then you have the conflict, kind of in the Middle East, surging oil prices, and what I'm most concerned about over there is the fertilizer, not as much as the oil, because that means food's going to go up. So food's going to go up, and oil's going to go up. And the thing that I don't think a lot of people think about is, if you look at an oil tanker, okay, oil tankers are about 3 times the size of a skyscraper, okay, and they can hold about 3 million barrels of oil. And if you look at the sheer size, so think 3 skyscrapers horizontally, and with that much weight. Well, the speed at which these oil tankers move are about the speed of a bicycle.
Yeah.
Okay. Yeah. So if the war started 30 something days ago and the Strait of Hormuz was shut down, conceivably there's still enough oil in the water going down the Cape of Good Hope, going up into the Americas or going over to the Asian areas, to where the market hasn't really seen. I think if you do the math, in about 7 days or so, you'll start to see what a real shortage looks like. Because for those 30 days of things not going through and 100 ships a day passing, that even today was at 20 ships a day is what I saw, you have a massive, 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 massive shortage of helium, which goes into producing microchips. And it's not just for making funny noises with balloons. You have a fertilizer shortage, which goes into inflation on food costs. You have a market that's in the middle of stagflation, where rates are actually going up. And then you have a global petroleum shortage. So these are real headwinds that, if investors appreciate them and they understand them and they deal with them head on, there's a lot of opportunity. But I think a lot of people are going to get caught off guard, and that's going to, create a lot of opportunity for us, but, also a lot of pain across the board.
Yeah. Well, something you said kind of perked up my ears with the whole office thing and home workers going back to the office. So maybe seeing a bit of a resurgence there. The other side of the coin is this fourth revolution, right?
Yeah.
With AI potentially putting a lot of those office workers completely out of work. What are your thoughts about that?
I have a little bit of I think from what I've read, a little bit of a contrarian view, and I've definitely been called worse, and I've definitely been wrong, and more times than I care to admit. But I don't think that the layoffs and things we've been seeing have been entirely AI related. I think they're using AI as an example. But I think a lot of people took on extra headcount during COVID. People took on, brought on a lot of these jobs, these big companies. They're spending a ton of money in AI, but the efficacy and the technology to truly replace workers at that level of the scale is not fully developed. We're on the front lines of dealing with some of the best founders in AI, look, it's going to go there, a time where, we're going to see, the Uber CEO, Dara Khosrowshahi, was talking about the 9.8 million drivers that Uber has. And he's basically projecting that there will all be robo-taxis at one point, and so that's 10 million people without jobs. That's one company. So, but right now, I still think there's a movement where there's a bunch of technical work that these AIs and things can't do. And just to refresh people's memory, there was a time when software was first invented that everyone thought no managers would have jobs. That just wasn't the case.
That's true.
And so it's like the Mark Twain, rumors of my demise have been greatly exaggerated. And I think that new technologies, they do this, they overcorrect, they have some hype. And I think it'll be a great enablement tool. I think a lot of people will get to use it. But I don't think that the mass hysteria that's been talked about will be just like, will there be unemployment? Sure. Anytime there's a new technology, things evolve, they change, but we're resilient people. People are resilient. They find other uses. And I think it'll just be reallocated. And yes, there'll be some pain, but not unlike other cycles that we've seen for the last 2,000 years of recorded history.
Yeah, fair enough. Good insights there, Ari. So as we're kind of wrapping up, one question that kind of comes to mind, you touched on the fact that over the last few years, it's been a lot of, dealing with investors, both, LPs and institutional, being their psychiatrist and
sure,
and all kind of going through the ups.
Which is your job too, by the way. When you're in the money business, people trust you, institutions trust you, individuals trust you, and you're not a psychic by any stretch of the imagination, but you're sharing the things you believe. You're are candid in them, and et cetera. And people get scared, and I think there's a lot of fear in the market right now. So I think being very transparent, hyper communicating, talking to people, talking to your banks, talking to your lenders, talking to your vendors, talking to your staff, is now more important than ever. And if teams band together, teams win championships, individuals don't. And I think that's very important. Just keep it at the front of our minds.
So based on what's been going on with the markets and real estate and whatnot, have you adjusted your approach to finding and attracting new investors at all?
Totally. I mean, absolutely. You're constantly innovating, doing that. The bulk of our money is institutional. But when institutions, get hurt and, their money hasn't come back, it's harder to, get that capital allocated. So we've done some syndication work. We've worked with broker dealers. We've pooled together smaller pieces of capital. We're working on a new Reg A Plus to attract a different type of capital. Because there's money out there. There's people that want to invest. They want to do stuff. But just like you innovate technology, just like you innovate real estate, just by using modular, you have to think about how the capital markets function. But I will tell you, there is unlimited capital out there. Crypto, yuan, yen, euro, dollar. There is money to be invested. If you have a great value proposition and you have the attention and people know you're there, there is money to be utilized, but the structures will evolve. The distribution methods will evolve. And so will the real estate and so will the technology.
Awesome. Ari, if people want to connect with you and find out more about you and what you do, where should they go?
Sure. They can go to rastegarcapital.com and learn about us. There's forms they can fill out if they're interested in investments. We have a bunch of great opportunities right now, and a simple Google search. You can find us on all the different social platforms as well by my name or the company name.
Perfect. And Ari, who are you looking to connect with these days?
Well, I think creativity of talking to people that are doing things is always interesting to me. I think from a capital standpoint, all the big firms are focused on retail capital for a reason, because they're nimble, they're looking for alpha, they're looking for returns, and the market is moving so fast that the capital can move fast with the deals to make them money ultimately. And I think that's important. So we're definitely working on enhancing our retail book profoundly. So, if you're a retail investor, you're a accredited investor, and you're looking to do stuff, you can reach out to us directly. And, I'm happy to say a real human will answer your call and talk with you. And if we're a good fit, we'll tell you. And if we're not, we'll tell you that too.
Awesome. All right. Thanks so much for being on the show.
Thanks, Dave.
All right, everybody, take care, and we will see you on the next one.
Thanks for listening to the Property Profits Podcast. If you'd like to be a guest on the show, apply at daveinterviews.com.